Well, from the Goldman Sachs trading error Tuesday to yesterday's flash freeze, investor confidence getting some big jolts in a bad way. Joining me now with their take, Gary Goldberg, Financial Services President Oliver Porsche, and New Oak Capital President James Frischling. Jim, you know, you're concerned that the NASDAQ is becoming the Wild West of trading. What do you mean there?
Well, again, I think retail investor confidence is somewhat disenfranchised right now, and you have all the electronic trading, and you have the idea that bigger is better, the small guys can't compete, and then actually this issue is one of information inequality, which is why they had to shut it down. The quant guys were getting information that the retail guys weren't, so they had to shut it. But the mistakes were clear. One is no communication, and your previous guest talked about that. And he was given a second chance to come out this morning and actually own up and recognize that changes were necessary. He could have handled it differently. And instead he comes out and says, I'm not going to spend my time speaking to the media or focusing on getting the word out when we're trying to fix the problem. Somebody in that company could have gotten out there and gotten the word out of what was going on.
And they didn't. And certainly we've talked about the media side of this and the communication side, Oliver. What about the technical side of this? From somebody in your position, you're sitting at your desk, you've got your terminal screens up, you're seeing the same thing we're seeing here, and those are frozen stock quotes.
Yeah, frozen stock quotes aren't good for anyone.
What's your day like?
Well, it throws it in a little bit of a tizzy, and you don't know what to do, and you're not getting any communication, which is the core. I mean, look, the good news is no one really gets seriously hurt in terms of investors or anything else. So in that sense, I think we can.
Do we know? I mean, but how can you equate that? And you don't know that at the time.
Well,
that it's
happening. You don't know it at the time, but I'm saying with the benefit of 24 hours of hindsight, here's a real big issue, and it holds true for all of the exchanges, whether it's NASDAQ, whether it's New York Stock Exchange. They're serving two masters. They're public companies that are worried about the bottom line. So their incentive to overspend on infrastructure is nil. Their incentive to spend sufficiently on infrastructure is inhibited by the fact that they're worried about profits and their own stock price. So I think that you're going to see those issues come up more and more because the pipelines to receive all the data, and as Jim was just saying, with the increase in high-frequency trading.
You're talking about the infrastructure, Oliver. I think that's an interesting point that you're making. I mean, you've got basically, I mean, this is the NASDAQ. This is now the New York Stock Exchange. Yeah. This is software built on software. All you're doing is upgrading your systems. So he's talking about a complete infrastructure overhaul.
Right, but he makes a very good point because there are conflicting interests here. But the fact is that technology is not going away. Automation is not going away. So the idea that it's an excuse to say, well, we'll do better the next time. The fact is more money needs to be spent, more fixes need to be put in place, more backup systems need to be put in place. And then if something goes wrong, and it will, the ability to communicate that message far faster. But I do believe that this software on top of software, again, your last guest talked about how dated this software was.
Sure.
There is a lack of infrastructure spend that is unacceptable.
A basic pricing problem on a glitch that took the market out.
Cheryl, you should have a switch-over mechanism that when something like this happens, that the stocks that trade on the NASDAQ, let's say to use yesterday's example, are able to trade and continuously priced on other exchanges. I mean, there's lots of exchanges out there. We like to always talk about the NASDAQ and the New York Stock Exchange.
It's the second largest exchange in the country, though, gentlemen.
I mean, I'm saying there's options, and they ought to build the infrastructure in a way that when something like this happens, which it will, that there's a backup system for it so that investors know that there are continuous prices and the portfolio managers like Jim and I can go ahead and do our business for the betterment of our clients.
No, you look at the number of mistakes, the flash crash, the Facebook IPO, now the flash freeze. And again, you wonder why mom and pa think it may be a market too. And that's why I said the Wild West comment. Maybe they don't want to play. It seems a little bit too gambling-esque, a little too casino-like. At least the casinos, by the way, their systems stay up and running. And by the way, their lights don't go out. Their tables don't go dark.
And they still bring you alcohol. I mean, that's the whole point. All right, now, I want to switch to, before I let you two go. Exactly. Well, they probably were drinking yesterday. Let me ask you this, though. Steve Ballmer, leaving Microsoft. Oliver, you sold out of your positions in Microsoft when he announced the structural change in the company. So today you're saying to yourself, sayonara, Steve, what?
Well, I'm saying it's about time. I mean, if you look at Microsoft over the last decade, and everyone's talked about the fact that the stock really hasn't done much of anything, but they've really missed some huge opportunities in terms of mobility, in terms of social media, in terms of the tablets and you know, the cloud. I mean, they bought Salesforce, but they probably overpaid for them a little bit. My point is simply this, that there's been very little true leadership in the company, and it's always been one or two steps late and never been forceful enough. And so a change at the top is probably the right thing to do.
Jim, real quick, Microsoft, second look, interested?
I am interested, and the fact is I think Oliver nailed the things that they missed, but the rumor on the company was, or the thought internally, a lot of infighting, a lot of divisiveness, and that starts at the top. So I get the change.
Gentlemen, going to leave it there now, but you're not moving anywhere. You're going outside for a moment. Oliver and Jim are going to be back with us, everybody, coming up a little bit later on in the show. They're going to be battling out. The semifinal round of our Fox Business All-Star Showdown starts today. And get ready for the showdown. Oliver versus Jim. Here they come to duke it out at our ultimate stock picking challenge. It is time for round 2 of our Fox Business All-Star Showdown. Every Friday, we've been pitting 2 stock pickers against each other with 2 plays each. We track them for a month to see whose picks perform the best. 4 players have been cut from the competition at this point. Now we are in the semifinals. Oliver Portia of Gary Goldberg Financial Services and Jim Frischling from New York Capital are back with 2 new stock picks each. Oliver, we're going to start with you. You're saying go big, go home. You're picking Apple. Why? Yeah,
Apple. It's a wonderful company, great balance sheet. They have some product launches coming up. The movie about Steve Jobs is probably going to give them a little bit of bump because it's a good energy. And the stock's been moving up nicely. It's been beating the S&P 500 since April 1st. So I think it's a good time to get back into some of the large cap stocks like Apple.
Okay, you like Apple. Just want to say the stock, as you look at it, the performance over the last month, it's been up 14%, but over the last year down 24%. So you're a little bit of a bargain picking thing.
Well, it's gotten beaten up, and I think it's gotten beaten up way too much. And when you look at what's going on within the company, you've got a huge share buyback coming on. You've got some real big institutional interest coming on. I mean, Carl Icahn came out yesterday and during the NASDAQ freeze lifted the stock.
Oh, yeah.
I mean, that's pretty unbelievable.
Me and Tim are going to have a little lunch in September.
Exactly.
That's going to be very interesting. All right, so Jim, your first pick is Sealed Air, SEC. Is the ticker here, and it's packaging.
Food packaging, protective packaging, and for us, this is all about a turnaround story. Which we like the new CEO. We like what he's doing in terms of taking a company that, in our opinion, had felt was fairly dormant and somewhat mismanaged. He is highly incentivized to bring shareholder value. I like how his comp is tied directly to share performance. It's about cost cutting in areas where they're not doing so well. It's about increasing margins. They got some leverage to get rid of, but they're doing it. But overall, very enthusiastic about what he's going to do here.
5.7 billion market cap, which actually I was surprised, and up 115% over the last year.
And that was that was one of the concerns about picking it. It's had a great run, and the biggest risk of turnarounds is, certainly there's execution risk on that. But we believe there's more to do with this company.
Okay, Oliver, we're going to go back to the go big, go home mantra for you today. Visa. You're digging Visa.
One of our top holdings in the fund that we run, as well as in separate accounts. And it's a wonderful company. It executes out as consumer confidence in the United States continues to rise, and as spending increases, Visa is going to be a big winner. They've gotten beaten up recently. The stock has sold off on some news about fees. We think that's overdone, so there's a good entry point here for long-term investors. And to us, it's not just about what's going to happen over the next 30 days, but it really is a core portfolio holding for the next few years to us because it's a great financial and you don't have the bank risk in there.
Jim's thinking. I can see that the wheels turning. Down about 4.5% over the last month. Jim's like, interesting. All right, last one to you. Exco Resources. Jim, now this is natural gas.
Natural gas.
Kind of a smaller cap situation here.
Yes, and I felt given the holding period we have, I had to do something that was a little aggressive, and it's a pure play on natural gas. We think they've just made 2 major acquisitions from Chesapeake. Chesapeake was the seller, Exco's the buyer. The question is why am I liking the company did the buyer? I think they got the better end of the trade. High margin assets, good cash flow. So again, we like the plan natural gas. I was enthusiastic about the tailwinds behind this stock, including the boost to housing, which we think helps natural gas. Then again, housing today got a little bit of a hiccup that we didn't like, but still believe that the U.S. as the recovery in housing continues, we think natural gas will play. We're also going into hurricane season, and that often plays very well to natural gas companies. Not wishing ill will, but September is hurricane season, and with that, we hope there's a big boost to natural gas if onshore is necessary.
You're saying, but you're right. This is aggressive, and we are going into hurricane season, and yes, things happen all over.
And I think that's an important point that Jim brings up. That when we talk about these stock picks, you want to put them in the context of an overall portfolio, because 30 days is an awfully short holding period. It makes great fun for guys like Jim and I, and we love it, but it is something that investors should be aware of, that we're looking at longer-term holding periods for these things and not just over the next 30
Getting
days.
the names out there and having a little fun.
That
Bets are
said, I'm
being
looking
placed.
forward to being back and beating him.
Oh, yeah.
The wager's not small. The Fox team wins no matter what, because
Exactly.
the Fox
I
Noon team is
heard.
invited out, and one of us gets the check. I don't know which one it'll be, but one of us is going to get the tab.
Get your wallets out, both of you.
I will
prepare.
mysteriously forget it, perhaps.
Guys, thank you very much. That was great. All right, just want to let you guys know once again at home so you can play along. Oliver picked Apple and Visa. He's going up against Jim picks of Sealed Air and Exco. We're going to be tracking these for 1 month, along with 4 picks from your other competitors that are currently going head-to-head. That's Robert Luna. He's banking on Freeport McMoran and the FTSE ETF. Scott Martin is back in the 20-year short TBF and Alarian Master Limited Partnership ETF AMPL. It was stock picking. I told those guys, but they fought me. Anyway, let's see who's leading out of those two guys right now. The average of Robert so far comes to just under 0.1%. Check out the Scott's average. He's got 0.1 of a point. Big movers here, guys. We've got 3 weeks to go for those picks, and then again, we've got a month to go for these guys. Gentlemen, thank you very much.
Thank you.